Good morning, Paul Georgie from Allendale. It's January 13th, 2011. The grain markets, following the strength that we seen yesterday, are higher here this morning. We should see a higher opening again. The corn anywhere from 8 to 10 higher, soybeans 5 to 7 higher, wheat anywhere in that 5 to 7 higher as well. Mostly off of the strength coming out of the USDA report yesterday. Showed corn stocks, for instance, stocks to usage ratios at 5.5, which is the lowest that we've seen since the 2008 number, where we had corn trade all the way up to the $8 area. So that is definitely providing some support, underlying support, as well as some of the people that have sold ahead of the USDA report now want to try to get back on the wagon, and they're having to pay up for it. Other supportive news this morning is the weaker dollar. That's translating to stronger commodity prices around the globe here this morning. The dollar is weak mainly because of the jump in the jobless claims number that came out here at 7:30. We've seen gold was down about $8 early this morning, now back to unchanged levels. Crude oil is down just slightly, and the stock indexes are lower here this morning. We had USDA weekly export sales numbers come out this morning. Corn was estimated at 300 to 700,000 tons. It came in at 507. Soybeans 500 to 800. 670 was the number there, and the wheat, very dismal number at 175 when the trade was looking for 350 to 500. Some other news that we've got happening here that's definitely taken a back seat to the USDA report, but Argentina farmers announced yesterday that they were going to basically strike and stop selling grain for a week starting Monday. So that actually is supportive to our markets as well, because the buyers are going to have to come to the U.S. To get the grain that they might need for immediate purposes. The also CFTC voted yesterday to table the vote on derivatives. They also have another hearing this morning on the position limits. It appears like they're getting some pressure from a few of the Democratic senators to make a decision on this quickly. However, they are going to look at it here today, and however, most estimates are that they will stretch that decision out here for a few more months. Our research, Rich Nelson, has taken a look at the price projections here from yesterday's USDA report, and based on fundamentals, we're still looking for this nearby corn futures to move somewhere in the $6.50 to $7 range to get us into an economic value there based on the tight supplies that we've got. Soybeans preliminarily look like we should be able to go to $14.75 to $15 just based on the tight numbers that we're looking at there from the USDA report yesterday. So looks like we should have any kind of sell-off here. Should be well supported just based on supply demand. How high can we go? That remains to be seen. There's a lot of emotion out there right now that will help support this market. In the cattle, cutout values were sharply higher yesterday. Choice was up $1.17. Select up $2.46. We did have some cash cattle trade in Texas Panhandle yesterday at 106 to 106.50. That's pretty much in line with last week. Most other areas still inactive, waiting to see who's going to show their hand first there. If with the strength in the futures, the feedlot managers are holding out for more money, and wouldn't be surprised if they don't get that here today as the snow clears out of those areas and cattle can be moved. In the pork, we get cutout values up $1 there. However, cash market's a little weaker. The Midwest has dug out, and producers are able to move hogs. That's putting the packers in a situation where they're getting plenty of hogs. They don't need to bid up for them. However, talking to one of our meat salesmen yesterday, and they're saying that the product demand is outstanding, and we expect that these cash hogs should be well supported on any break. So looks like an overall positive picture for agriculture here at the moment. The thing that the flag that we want to send up right now, you got to remember that when these markets go higher, they have a tendency of coming down faster, and we in the agriculture production sector, we've got to be able to take advantage of these higher prices. So be aware of that. Contact your Allendale representative. We'll work out some strategies for you that can help manage some of that risk. We also want to make sure you get invited to the Allendale Conference coming up here on January 21st, 22nd, next weekend. We'd love to see you there. We do have some seats available, so give us a call or sign up on the web. We'd love to see you there. We wish you a very successful trading day, and we'll talk to you tomorrow morning. Thank you.